Money FM 89.3. Best of breakfast. Companies to watch.
All right, time to welcome Delectable Dan for this segment. Good morning.
Good morning, Ryan. I'd like to see how you carry this on until Friday, Ryan.
I'm sure many ways to describe you.
Thanks, Ryan. Now, welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends to risks as well as hidden gems or warning signs to steer clear of. 8855-0893. Tell us whether you think it's going to be a hot or not. Ryan, you ready?
Let's go.
Okay, we're turning to a Chinese battery manufacturer and a technology company founded back in 2011. Now, they just made their IPO news yesterday, and in fact, it became one of the biggest, if not the biggest, Hong Kong listings in a while. I'm talking about Contemporary Amperex Technology, CATL for short, and their primary focus is on the production of lithium-ion batteries for vehicle and energy storage systems, and they are by far the biggest producer of lithium-ion EV batteries in the world. So let's talk a little bit about their Hong Kong trading debut after the Chinese battery giant wrapped up the world's biggest listing this year by raising $4.6 billion, Ryan. So that's even despite being blacklisted by the Pentagon and grinding through geopolitical storms. So we're seeing shares of CATL, the largest maker of electric vehicle batteries, they climbed to 16%, finished the trading session at $306.20 Hong Kong cents on Tuesday. What are your initial thoughts on its IPO so far, right?
Yeah, I think it's in a sweet spot. Batteries for EVs, you definitely are going to see quite a bit of growth there. And CATL or CATL is one of the biggest names around.
I mean, I was quite surprised to know how it's not been listed in the Hong Kong Stock Exchange as of now. It's seeing how big it plays within the EV field. And though Hong Kong shares of the Chinese companies typically trade at a discount to those in the mainland, CATL soared above its stock price in Shenzhen, where it rose 1.2%. So for investors, the allure of buying into a blue chip stock at the forefront of electric vehicle technology had outweighed the risks of getting caught up in the ongoing turbulence that we're seeing with the U.S. relations. Now, the success of the stock offering, which may increase to $5.3 billion if CATL exercises an option to do so, that would single-handedly double Hong Kong's proceeds from listings this year, also spurring confidence among other companies to go public. So it's been touted as a true champion enabling the energy transition, a symbol of China's success as a global green leader. CATL is currently priced at about 17 times current earnings multiples. And here's the thing, Ryan. Researchers say that CATL's Hong Kong shares still have room to run about 50% up, driven by strong earnings and attractive valuations. And some even called it a no-brainer buy. The listing also attracted big interests from options traders, with more than 34,000 options changed hands, with bullish contracts outnumbering bearish ones. So let's find out a little bit more about what they do specifically. And basically, CATL supplies batteries to top-tier customers from the likes of Tesla, Volkswagen, Ford Motor, and Mercedes-Benz. And according to S&E Research, it has a market share of roughly 38% in electric car batteries, right? 38% worldwide.
Yeah.
That's comfortably ahead of its closest challenger and the top EV maker, BYD.
Yeah, so if you look at the list of car makers you mentioned, for example, Tesla, if they do well, CATL is going to do well.
Exactly. So seeing how the world's also pushing for more EV, this is certainly a space for them to grow. And just last year, the Fujian-based company generated sales of $50 billion and net income of $7 billion. And it still plans to build on that, recently unveiling batteries that can charge 520 kilometers of range in 5 minutes, Ryan, and up to 1,500 kilometers on a full charge. That's competing with the likes of BYD. If you remember, just quite recently, they announced the fast charging port that allows their EV to run for up to maybe 400 to 500 kilometers with a single charge at, I think, 5 to 10 minutes or so.
Yeah, 5 minutes as well. So they kind of topped it up and added more mileage for the same time. So well done.
Exactly. So the funding, much of it for the $7.6 billion overseas expansion in Europe, will be used to fuel its growth outside of China, where profit margins are juicier, and they're starting to see some slowdown in the China market. So let's not forget that CATL's rise hasn't come with obstacles, because like I've mentioned earlier today, the Pentagon blacklisted them as they found themselves in the crosshairs of US-China trade earlier this year, where they basically just suspected CATL to be linked to China's military, and their allegation so far has been rejected by CATL. And in April, a congressional committee in the US publicly called on JP Morgan and the Bank of America to stop working on the listing because of CATL's alleged military links, again denied by the company. So since then, American banks stuck with the deal, and it seems like it's paying off very well. In terms of tariff fronts, it seems like CATL doesn't really expect to have a lot of risk or a lot of impact influenced by the US tariffs.
Yeah.
That stands in stark contrast to the growing list of automakers from Toyota Motor, Stellantis, and General Motors that have warned of billions in extra costs when it comes to the Trump's tariff war that has been playing out in recent months. So, according to analysts, the company's growth in China was going to slow over the coming years due to the already high sales penetration, which is why Europe is an exceptionally important market for CATL. Presently, Europe only represents about 20 to 25% of sales penetration, so it goes without a doubt. There's a lot of room for them to grow, and there's a lot of, just market share for them to capture when it comes to Europe. Verdict for me, I'm probably going to go with a hot for CATL.
Yeah, I'm not sure if it's good timing or just good fortune because we've been seeing the US-China trade tensions start to ease up in recent days.
Yeah.
So maybe that played a part in CATL's day one IPO doing pretty decently.
Yeah, certainly. And we'll see how this plays out for at least the next few months, because it might also be a hype, but there are lots of convincing investment case for CATL as of now. And yeah, that would pretty much do it for our Stock in Focus of today. Now, Ryan, here's some fun facts about CATL. It has been the global leader in EV battery sales for several years. It has been investing heavily in R&D, with over $3 billion spent annually to stay ahead in the race for more energy-dense and cheaper batteries. So, why did the EV break up with the gas car?
Why did the EV break up with the gas car? Why?
Couldn't handle the toxic emissions. So why did the EV go to therapy?
Why did the EV go to therapy? It has some problems.
Yeah, close enough. It has range anxiety.
Okay.
Okay,
Not too
bad. And that's all we have for Contemporary Amperex Technology.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.